Hey everyone, in today's episode, we're going to take a look at how the third quarter went for my strategies portfolio. If you're not familiar, I'm investing in 4 common investing strategies. I have a portfolio focused on an ETF that tracks the S&P 500, a portfolio focused on growth stocks, a portfolio focused on dividends, and one that is focused on both growth and dividend stocks. If you want to see the actual portfolio spreadsheet, the one that you see right now, the link is in the description box below. And if you like my content, please give this video a thumbs up, subscribe, and let me know in the comments what you think. Alright everyone, let's get started. The third quarter of my strategies portfolio went from December 1st through February 28th. What happened during that time? Well, Omicron variant ripped through America, the looming interest hikes are coming, and Russia has attacked Ukraine. The markets have been hammered and investors are feeling the pain. What stands out? I think the biggest thing that stands out to me is the power of dollar cost averaging. I'm in these stocks for at least 1 year till June 1st. I don't have a crystal ball, but I believe in the long term. I don't want to waste so much time timing the market, so it's easy to just go in cruise control and accumulate as much as possible for stocks I perceive to be deep value. I want to show a few examples of dollar cost averaging. Looking at Alibaba, in the second quarter, my average share price that I purchased was at $155.81. In the third quarter, my average share price was at $120.43. When I look at NEO, my average share price in Q2 was $38.80. In Q3, my average share price was at $27.24. Teladoc is one of my biggest losers, but I believe in telehealth for the long term. In Q2, my average share price was at $131.02. In Q3, it was $81.30. When I look at DraftKings, my Q2 average share price was at $46.66. In Q3, it pretty much dropped 50% down to $24.28. And looking at my dividends portfolio, Avi is one of my favorite dividends of all time. In Q2, my average share price was at $111.73, and in Q3, it jumped to $137.47. My S&P 500 portfolio is currently down 1.65%. My growth portfolio is currently down 20.61%. My balanced portfolio is currently down 10.3%, but my dividend portfolio is currently up 5.1%. It definitely sucks to see a lot of your stocks in the red, but I believe in the future long term, whether it's sports betting, e-commerce, electric vehicles, or telehealth. I'm here to lower my average price per share, and I believe these stocks will bounce back in due time. Looking at AT&T, one of the most talked about dividend stocks the past year, they are officially cutting their dividend. When I first added AT&T, it was right when AT&T talked about the spinoff of their Warner Media segment with Discovery. That spinoff is expected to be completed by mid-2022. A lot of dividend investors sold out, but I'm glad I didn't. I was able to accumulate dividends from AT&T and use that to invest in other stocks. Even a few dollars can mean a lot of fractional shares for deeply discounted stocks. And going back to dividends, my dividends portfolio is an absolute powerhouse. Avi continues to hit all-time highs after all-time highs. Dividends may be boring to a lot of people. Some people don't invest in them because they won't see much capital appreciation. For me personally, the ability to get consistent dividend streams while also benefiting from capital gains if I ever had to sell out is a huge plus. I've said this before, but investing in boring old companies is totally okay. And looking at ETFs are a great investment. Look at the huge difference between my ETF portfolio compared to my growth and my balanced portfolios. My ETF portfolio is currently down 1.65%. My growth and balanced portfolios are down 20.6% and 10.3%. Even with the market downturn, ETFs won't see the volatility of, say, a portfolio with Alibaba and Teladoc. It's okay to invest in ETFs. Don't let anyone tell you that ETFs are dumb. ETFs can offer a lot of peace to an investor. From what I see on social media, in my honest opinion, a lot of investors should invest in ETFs. What's next for the portfolio? Well, right now we're about to enter Q4 of this portfolio. We have 3 more months, and on June 1st, we'll hit the 1 year mark of the strategies portfolio. I'm currently deciding what's the next move after this. I might sell out of a lot of positions and focus on just a few growth stocks and track how they do for a while. I might switch this portfolio to an all Chinese based portfolio and see how that goes. I might just focus on international stocks or American growth stocks. I might stick to this current format and sell a few stocks and replace them with others. For example, I really like SoFi. I might swap that out with a different growth stock. AT&T cut its dividend, and I want to swap that out with a consistent dividend payer. That's all I have for you today in regards to my Q3 portfolio update. If you have any questions or comments, feel free to interact with me. As always, thank you for tuning in, stay safe, and I will see you all next time.